Hello everyone and welcome to episode 10 of Ask Mortgage Mike, where I take topics and questions that have been posed to me regarding the mortgage industry, and I try to educate you, the viewer, on the questions. So today we're going to discuss down payments and loan programs and how much money is required to put down under the loan program. So the first ones we're going to start with are 100% financing loan options. The first one is a USDA loan. And that's a United States Department of Agriculture. It's generally for rural areas or properties outside of major city limits. You can check your property eligibility by going to USDA and looking at the property eligibility. USDA requires zero money down, so you can do 100% financing, but it is income restricted, meaning that you have to meet certain income restrictions to qualify. You can also check your income qualification on USDA's website as well. The next loan program we're going to discuss is VA, a veteran's loan. Obviously, you have to have been in the military and be eligible for a veteran's loan. The way a veteran's loans work is you're required to put zero money down as long as you're below the conforming loan limit for your county. You can check this on VA's website or by doing a simple Google search also. But most conforming loan limits are 417. There are some places that have higher median home prices and they'll go up to 625.5. However, if you go above the conforming loan limit for your county, so let's use Mecklenburg County here in Charlotte, they have a conforming loan limit of 417. If you bought a house at 517, so $100,000 above the conforming loan limit, VA requires that you put down 25% of the amount above the conforming loan limit. So on a 517 purchase in Mecklenburg County, you would then be required to put down $25,000 because you're $100,000 above the conforming loan limit. The next option we're going to talk about is Fannie Mae has a 3% down payment program. This is really for people, first-time home buyers. Now, to consider yourself a first-time home buyer, you cannot have been on title or hold a mortgage or have held a mortgage in the previous 3 years. Now, this requires 3% down, be eligible as a first-time home buyer, but the mortgage insurance is greatly reduced on it. So it's significantly less than if you were not a first-time home buyer, and you can put 3% down. The next loan program that we're going to look at is the one that's more well-known, more secularized, and that's an FHA loan. FHA is great if you don't qualify for the other loan programs. When it comes to minimum down payment, it does only require 3.5% down, but the mortgage insurance and the fees up front for FHA are significantly higher than the other aforementioned loan programs. Then you get into your 5% down, which is what most people assume with, where you can just do 5% down to a conventional mortgage and go that route. The next option that you would get to is if you put down 20%, that's how you would avoid the mortgage insurance, which I've spoke about in previous episodes, how to avoid mortgage insurance. But to get into a jumbo loans are any loan that's above the conforming loan limit. So if we go to 417 and $1 in Mecklenburg County, that would be considered a jumbo loan. Now, jumbo loans generally require greater down payments, but here at Homebridge, we have the capacity to do a 5% down on a jumbo loan with no mortgage insurance. So that's a fantastic product for us. Now then, for primary residence and second homes, you're generally going to be held to those down payments that I discussed previously. However, if you're going to buy an investment property, most investors, most lenders are going to want a minimum of 20% to 25% on your down payment. So if you have any questions, feel free to email me at askmortgagemike@gmail.com. Again, this is Mike Pennington with episode 10 of Ask Mortgage Mike. Hope everyone has a great week.